You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back again one final time for the week. And indeed, for our broadcast year here on the network. Crazy to say that out loud, at least for the on-demand side. We will be back one more time on the pro side a little bit after the Vol Views show is over for Options Oddities. So stay tuned for that if you're on the pro side. Of course, a wild year we have. A lot of fun to break down in kind of our year-end spectacular edition of the show. Of course, if you like what you hear, you've been listening to it throughout the year. You want other people to join the Vol Views party that has been running for well over a decade now. Only one place to go. Wherever you get this content, make sure you leave a star, a comment, a rating, a review, whatever they let you do. At the end of the day, all of that in aggregate helps new people continue to discover the program. My name, of course, Mark Longo from the optionsinsider.com. If I sound a wee bit different, it's because I'm coming at you not from our Chicago studio, but actually the Southern studio here today. So going to be here for probably the rest of the year. So if I sound a little bit different, that is why. If you're listening on the live side too, also going to be a raw edition of the show. Not going to have all the transitions and everything like that. So if the post on the on-demand side, you won't notice a blip, but on the raw side, on the live side, I should say, you get to hear the raw uncut edition. And of course, if you want to check out the pro for yourselves, you got another week or so to get in there for the December Pro Trading Crate. Crazy. It seems like we just gave away the November one. Already given away the December crate. Also, we want to get in there ahead of Options Oddities coming up in a little bit and all sorts of other fun. Only one place to go, theoptionsinsider.com/pro. But once you're there, you get access to the archives or everything we've done on the pro side, which is close to 300 episodes now, as well as live access to everything we do. So when we do all those double headers like we did last week for Pro Q&A and Options Boot Camp and everything else, folks get them in your ear holes immediately. And you also don't have to end your broadcast week with Volatility Views. You get to come back a little bit later for a little bit of the old Options Oddities. Going to have a fun year-end spectacular there as well, looking back at some of the weird, the wild, the crazy trades and trends that we noticed on that show throughout the year. So that should be fun. Theoptionsinsider.com/pro is the place to go to check that out. As we go around the horn, see who's joining us today here on the program. First, for our final show of the year, we go out to the dark, the stormy, the hellacious shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show for Volatility Views at least one final time for the year, sir.
I appreciate being here. It is the final show of the year. It's kind of like, what a year.
The show
even though Henry made fun of me on Thursday, but
there we go.
I was only gloom and doomy some of the time, not all of the time.
Not all the time. Not all.
My defense.
Okay, just a little bit at the time. We would turn to Uncle Mike usually for the ray of sunshine, and then we would turn to you for the counterpoint, the juxtaposition, the dark and storminess over there. So we'll look forward to some of that here on the show today. We also will reveal, Mr. Rock Lobster, so stay tuned for this. We will reveal the results of our crystal ball contest for the year. Who is our winner? So stay tuned for that because you are represented on that list. And then also joining us for the final time this year, we got our old buddy, Mr. Matt Amberson from ORATS, a.k.a. the Auto Father, the rogue AI that is peeking at you through your window right now as we speak. Mr. Matt, welcome back to the show, sir.
I can't believe you've been doing this for 10 years. I remember I used to see you at the option conferences interviewing people, never to know that I would be eventually on the show. So it's nice to have that honor on such a long-running show.
It all comes full circle at the end of the day. As the show goes full circle, right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, welcome to the Volatility Review, everybody, the portion of the show where we break down what the heck is going on in the world of volatility one final time here for the year. We will get a little bit later into some of our thoughts, our trends, our opinions, our trades, our developments that resonate to us out here from the year that was 2023. We'll get there in a second. As we're coming into this final episode of the show for the year here, what else could we expect to see on the screen, listeners, but a little bit of green? S&P up about 0.4% as we're kicking off the show here. NASDAQ up about 0.4% as well. Dow, ever the laggard, only up 0.2%. And, because we've been talking about them a lot lately, let's go out to the land of small caps as well. See what's cooking out there. Small caps up nearly 1.4%. So once again, small caps just doing their own thing. Gotta love small caps these days. A lot of interesting stories unfolding on that side of the market. Everyone wants to talk Magnificent Seven, and I get it. They pretty much strapped the market to their backs this year. But outside of those, small caps, some interesting tales to be told out there as well. How many names have we talked about on the odd block throughout the year, listeners? And they hit their high for the year on February 2nd and never looked back. Or maybe some of them were late bloomers. They hit it around Halloween and then have never looked back. Either way, the notion that everything has just gone straight up like the Magnificent Seven, not so much once you get outside of those names. So interesting layers to the market out there this year. That means our old friend VIX Cash, interestingly enough, a lot of people, myself included, I was looking for a little bit of maybe some vol downside post-Fed, and we never really got it. We got down to about 12.5, broke through it a little bit, but then we kind of kept rebounding off that level. It does seem like, at least for the time being, there's a near-term floor to vol, and right now, coming into the show, we are seeing, once again, markets up and vol up, VIX up about a point as we're kicking off the show. It was up a little bit more. It was up about 1.25 points earlier in the session. Now about exactly a point from where it was this time last week at about a 13.25 right now. VVIX, the vol of vol itself, also looking frothier, looking juicier, also perhaps portending more shoes to drop in the weeks and months to come, hanging out at about a 90 right now, which for this time of year, December 22nd, decently frothy, all things considered. Let's go around the horn. Let's start with our guest, Mr. Matt, sir. Interesting times, vol remaining stubbornly frothy through the end of the year, a time when usually it's pretty seasonally quiet. What's been catching your eye out there this week from a vol perspective, sir?
Yeah, it's the strangest thing to me is the skew, the calls versus puts. It's actually in the small caps, it's gone negative, meaning the calls are higher than the puts. So there's just not a lot of fear out there. And again, I think a lot of it is the zero DTE. I've made this case before where, Andrew and I stood next to each other as market makers on the floor, and you just get these positions that everyone would have. We'd all have the same positions, and we were dying to get out of them. If we would have had a zero DTE in more liquidity and volume in the front 2 months, you could really get out of some of your positions. So like these market makers that, the way it used to be is they would be selling puts all the time to these big banks. So they'd be short these out of the money strikes, low strikes, and then people would be buy writing, so they'd be selling them calls. So they'd have a bunch of calls that they own. So the skew got very steep, meaning the puts or the implied volatility way higher than the calls. That's the way market makers work. They just keep jacking it up. But now it's the opposite. It's just so low. It's as low as it's been since we started measuring it. So I think that's the most remarkable thing right now, Mark.
Yeah, I just pulled it up while you were talking. I was looking at some historical skew data for IWM, and you're right. It was -6 just about a week ago. That was the low for the year. I guess you can think of it the high if you flip it the other way. That, of course, means, listeners, the calls are bid over the puts. You don't see that very often out there in equities, but can you blame them given the way small caps have been moving? Right now, we're looking at a 30-day skew that's close to flat, maybe a slightly positive 4%. So that means the puts kind of overtaking it again on the 30-day front. But again, when's the last time you saw the S&P go negative? I can't recall it off the top of my head. So it's definitely an intriguing. If you're wondering what the high for skew was, it was back on May 15th of about a 31, almost 32%. So the puts were extremely jacked back in May. Today, nobody wants them. It's all about the calls. So again, that kind of shows you how small caps and IWM in particular, they just tend to march to the beat of their own drummer, listeners, which makes them fascinating out there these days as we keep on rolling. You know who else is fascinating, at least sometimes? It's the Rock Lobster. Mr. Rock Lobster, sir. What is catching your eye? What is fascinating to you out there this week from a vol perspective?
Well, so first thing is we had that kind of that surprise sell-off, right? So VIX was kind of in the 12 handle for a week or so, more than a week or so. And since we had that large rally last week on Wednesday, VIX cash has mostly spent all of its time going up, and all the vol products, the long vol products went up, and all the short vol products went down. Like look at VXX, UVIX, and all that from Wednesday last week. So there was kind of a steady up. Like when we have these sharp rallies, everybody and then the short vol products peaked on that day, Tuesday, Wednesday of last week. And since then, all the short vol products going down again. Again, this is all because VIX futures basically just kept rallying. So when you look at that, you're like, okay, but the market really never sold off. I think it had like this. I don't know what the reason. I think there was some sort of rebalancing, possibly. I don't know what the reason was. Zero DTE hedging, who knows? But when implied vol is in the the 9-10% range in the 2-week options, the holidays have basically been just decayed out. And traders have sold all the options they wanted to sell. You had pretty depressed prices, and they popped up because the market moved. So even with a 1.5% rally or drop, almost 1.5% on Wednesday. I mean, where did VIX peak out at? I'm going to say. And actually, I think VIX peaked yesterday on the rally, if I am not mistaken, but I could be wrong. Let's see here. Pretty sure. Yeah, so let's see here. I'm pretty sure it peaked yesterday. Yeah, it did. So yesterday into the rally for SPY. So you had VIX drop, made the move from it was in the low 12s. Wednesday peaked on that sell-off, and then while SPY or SPX was rallying all day yesterday, VIX peaked at noon into the rally, which talk about a correlation break, but it was nonetheless. That's what happened. And since then, I'm not going to say it's steadily down, But it's kind of getting down there into the low 13s now. So it was all kind of curious. And I just think there was like just an ebb and flow of how much traders thought the market was going to move. I mean, ultimately, that's what it is. And I think there was at some point that vol stayed pretty bid because were we going to recover the whole move on Thursday, meaning down 1.5%, up 1.5%. So the liquidity provider is not going to let those option prices probably don't get too cheap, especially if there's a lot of upside call buyers into that. And so I thought that was kind of odd. And now, as pretty as you please, the vol curve, VIX curve dropped into what I would call just a normal contango for this period, for this amount of time to expiration. And we have 3 holidays between now and the January 17 VIX expiry, Jan 19 ordinary expiry. So I think we have a pretty normal curve into the weekend. So 3,800, 4,800 is 35 points away in SPX. It would surprise me if the year didn't end on there just to put the final nail in. Although I think we get there slowly. But that's as far as like from a vol point of view, interesting. But I like Matt talking about how, there's a bid for upside options. And again, because that's what people are buying. I mean, ultimately, when you have a bull market, people buy calls. So it's not a surprise that the paper has been coming for calls lately.
When's the last time you and I talked about VIX peaking into the rally, Mr. Rock Lobster? It's been quite some time. Yeah,
I know. It was very odd yesterday. And of course, if you have a strategy that one of your strategies is short VIX, short SPX, you had a
super win
on Wednesday, only to get steamrolled like a mouse crossing the street, getting run over by a garbage truck. So
I had half of that. I had the short VIX side. I didn't have the XPX side, thankfully. I had enough fun with the short VIX side. I didn't need the short SPX side to add.
I know, when you have those hard sell-offs, I always wait for the next day, and I hedged a little bit at poor prices by selling some downside puts and stuff in SPY, but nothing great. So it's going to be one of those things where I'm really going to need a month of lower vol to end up paying the trade, which is not the first time I've had to wait a whole month, but at least right now, yesterday was just an abysmal drubbing for one day. So all those people that say they trade and they don't ever have any losing days, I go, I didn't close a loser yesterday, but it sure felt like a kick in the shins. But
those people who say they always win, they don't come on my network. I don't let them on. They go on CNN.
Exactly. Yeah,
I don't let them on here. I had this conversation with somebody yesterday. I was like,
yes, I like to see that never losing.
Yeah, people who just want to talk their winners in their book, they go elsewhere. They don't come here because the doors are closed to them. But yes, it's not often you could say that you're getting run over on VIX to the upside in late December. not a normal sentence we say here on this show, which just makes it fun.
You know what? It just tops the year off. There was so many surprises. Like when I popped into the show yesterday, Thursday, and the option block. But this year was a year of surprises where none of the gloom and doom has come to pass. So
this is a year
that's good for everybody's retirement account. That's all I'm going to say. Nobody's going to complain about that.
Year where up is down, down is up, rate cuts mean rallies in the markets. All sorts of things are backwards. So why shouldn't vol rally into the end of the year? It's very seasonally and just appropriate for this year. Speaking of this year, Mr. Matt, we will start with you, sir, because it is our final show for the year, at least for vol views. So it is time to look back on this mad topsy-turvy year. So when I say that to you, Mr. Matt, I say looking back at this insane year, going back all the way to who can even remember back to January now? We were all so young and innocent, sir. It was like a different lifetime. But that said, when you look back at the mad year that was 2023, What really stands out to you, sir, particularly from a vol perspective?
Yeah, I mean, we started at around 380 SPY and went to 470 something. What's that? About 25%.
A lot of that in the last month.
Yeah, and yeah, I mean, we had a few dips. I mean, a few healthy dips to the market with some good spikes in the implied of SPY, and SPX got up to about 23 in March. And then just went down and down and down. And when IV is going down, the market's going up. And, again, that slope that was actually quite high in May during that rally. What used to really happen is when the vol went down, then the skew, at least the way that we look at it, would get more pronounced. So it was so it was behaving normally in May, and then I think the zero DTEs kind of swamped the market at least in the skew, and then that skew has come down since May pretty steadily, and then all the way to where it is now. So I think that helps my argument about zero DTE crushing that skew that used to be into the market. And I think vol to some extent, I mean, if you look at what happened in October with the market coming down in three waves starting in August, it's down in August, rallied back up a little bit, September down, in September, end of September, rallied up a little bit and came down and ultimately bottomed out around Halloween this year. But the vol really didn't go up. It was only got up to about 18, whereas it was 23 back in March. So and it wasn't. I mean, it's slightly more violent, but not really. So I mean, again, I think zero DTE has a lot to do with what's going on here, in both implied volatility being. I think it really has the effect of putting a dampering on the market. And I think, the argument of what's happened this year is that's the biggest thing, really, that the biggest thing that I see is that dampening of vol, extreme dampening of skew. So that's how I look at the year, Mark.
No, it's funny you say that because we just had that. Some people are calling it mini flash crash a couple of sessions ago this week where we kind of turned to the dark side over 1% towards the end of the session. A lot of people during that were pointing their fingers at 0 day saying, oh, look, there it is. There it is. There is the example of 0 day being the accelerant that turns the market here, or at least fuels the downside move. You think it's the opposite. You don't think that was the catalyst there, sir? Or maybe not catalyst. Maybe that's the wrong word, but the accelerant, sir, the gamma bomb popping off.
Yeah, I mean, so I've seen that, some people talking about that, and it can happen, but I think for the most part, it's really been a dampening effect and had that big effect on skew. So I don't, again, it might have happened, but I'm not buying it as much as people are selling it out there in the Twitterverse.
One other question for you: are you going to be on the 3,000 before 5,000 train for next year as well? Is that still coming?
Again, up is down.
Yes.
Wars are peace.
Yes, exactly. Dogs and cats living together,
yeah.
Mass hysteria. That's the world we're all living in.
Yeah.
So, if past is prologue, Matt, rate hikes equal massive rallies. So rate cuts next year, 3 of them, the market should tank.
Well, actually, that's what tends to happen is when the Fed finally has to come in and start cutting. I think they know something, and then that's when the market really feels the pain. So, being on the market, you get a little bit salty and cynical. So that, you protect. I have my money in the market, but it's very protected. And then these rallies, you got to, I have some ways to get long them and some cool things not to get too beat up. Like these put calendars are there and ready for. Sometimes this market has to turn around, Mark. So that's the way I just need to stay disciplined. When the market's going up and everything's great in business and all that. But when the market turns and it really turns bad, you want to have some protection. So don't get don't get too complacent here. Enjoy the rally, make your profits, but have some protection is the way I think about it.
You heard it here first. Our 95th listener, stay frosty out there. 3,000 before 5,000 in 2024. Matt's coming for it. All right, Mr. Rock Lobster, same question for you. As you look back on this mad, tumultuous, I think to encapsulate it, upside down year that was 2023, what really resonates and stands out to you, sir, from a vol perspective?
Well, I think considering like the headline news we've gotten, so in the past, you'd have like these bank defaults, and I think this is really the most important thing I can think of is the extent to which the Fed can dampen the market sell-off, dampen vol. So March, you had Silicon Valley Bank got bailed out, some rich people. Again, I think rich people getting bailed out by the government. And like a few banks failed because they got stuck with all the bonds and whatever that the Fed made them take. And who knows about how they managed it, but clearly not well. But and that got us what, a 20, maybe a 30 VIX. But generally, when you have like a full banking crisis, you would assume vol, but a 30, right? 30, 31. And it lasted for a few days. There was some flim-flammery with the Fed and the Treasury. And then I believe, again, I could be wrong, but I'm pretty sure at some point they said, okay, well, if you have bonds, you can turn them in for face value to the Fed if you need liquidity. I'm 99% sure that's kind of what happened. And I mean, you could see that I think was the dead bottom of SPX for the year, if I'm not mistaken. Oh, look at that. Dead bottom, literally the day after that. 3,800 SPX. So, and then from then we had a couple of credit downgrades, which is, you recall, like 2010? Crushed the market, right? Because you had a lot of just government spending money like drunken sailors. They are spending far more now, 40% more than at the beginning of 2020, the federal budget. On what? I don't exactly know. I don't know. So right now, so those are the two things from a vol point of view. Like you would think, so the Fed dampened one move, and then the market didn't only cared for like 2 days about the downgrades. And even though everybody knows that the deficit's out of hand at some point. But the Fed's continuing with QT, and they continued raising. So they assume that it will get fixed at some point because now that the Treasury has to pay market rates, no more zero, borrowing at zero. So we'll see how that turns out. And like most things with the market, it's not a thing until it is a thing. So that was really the surprise for me was. So the market basically being repaired by the Fed, and then the Fed continuing to kind of hold the line everywhere else, and made any other adverse news, market news, just go away. So rates are now fully higher than they were last year at this time, and so it looks like they're done raising in the short term. And we'll see what happens from here. So, and normally when you see that happens, stocks rally. We'll be back to maybe a more normal market. Yeah, when Fed lowers rates again, everybody's like they're lowering it because recession or their economic slowdown, and that we might get green is green and red is red again. The sky is blue once again. So those are, I think, the dampening. At least from the Fed point of view, they were able to dampen market volatility by glossing over some structural problems that existed. So that's what I was the most surprising. And just the last thing I would just say is just the upside, how low the volatility is in the Magnificent Seven type stocks, considering how far they've run and how strong the momentum of those stocks in general still is. I would not get it, I have not gotten in the way of those things. So who knows how high they can go? We've all lived through the dot-com crash. And prices you see now might look cheap in a year or two. So who knows? But those are, I think, vol there is way too low for, basically the multiple and the levels of the stocks are and just how much they keep going in one direction.
All right, listeners, it is our special year in review, and I see a lot of requests coming in from the live. We have Matt on. They want some earnings vol analysis. So, Matt, never let it be said that I am not a man of the people who gives the people what they want. So, Mr. Matt, as you're looking back for a very special earnings volatility report year in review edition, sir, what is it that stands out to you this year on the earnings vol front?
Earnings announcements can move markets, but what is the options market telling us about upcoming earnings events? Let's find out with the Earnings Volatility Report.
Yeah, and as you know, and helped us design this earnings season report that looks at, it's basically 6 weeks of earnings, contains 95% of the company. I mean, we just had Nike with a huge move. They were implied to move 6%. I think at one point in the morning they were down over 11. So that was a big move in Nike. We had one of our forecasts was pointing for a big move in Nike. Our forecast has done really well this season. I mean, this season started. We're wrapping up. This season starts in October, the one before that, July, the one before that, April, and one before that, January. So, this one wrapped up, very good to the straddle owners. And we kind of predicted that last year, through COVID and after, it was not very good for straddle owners, which means that the straddles that are priced, the stocks were not moving at that amount. But what we are seeing this year, I mean, we were making volatility earnings great again. So, I think that there's a lot more to be said next year too about these companies that, they're having to give guidance, and it's very difficult out there. And is there going to be is a recession finally going to hit? What are rates? You have more volatility in rates. It makes it more difficult to make decisions in a company. So this earnings season was very good. Last earnings season in summer, and that went from July and August, was kind of right on the number, kind of a break even. And then the April was below the number, so the option owners did not do well. And then January was slightly above. And again, what we see, the rule of thumb that we see is when the market's volatile, that it does not help the returns for straddle owners, around earnings. There's so many other things going on that the focus is not what's happening in the earnings. That investors aren't focused so much on what is said. There's so much other stuff going on. But as you saw, that this year in general is much higher than previous years. So that's the big takeaway. And again, I think what the trend is through these last quarters is that it's going to, it's getting more and more kind of volatile above expectations. I mean, the good thing about our earnings season report is it's really comparing the expectations of the market to what's actually happening and how much things are actually moving and how much they're really punishing stocks out there. And there's, with these valuations, it's, the companies and the Fed themselves are walking a tightrope. They can't. It's got to be Goldilocks, or they're going to fall. Same with these earnings, and so I think that what we're seeing is a lot more movement, and I think that will continue into next year until we get some type of correction. I believe, because it's just there's so much risk in these growth projections that's driving a lot of where we are in the market. So that's how I'm looking at it, Mark.
Yeah, a lot to unpack there. Hope you enjoyed that little bit of an earnings vol review here for the year. We'll probably do another one when we come out into the early next year on the advisors option. So those of you who love the earnings vol, I know there's a lot of you out there. I wanted to make a special little addition here on the vol review today for our end of year extravaganza. As we keep on going, not going to spend a ton of time digging into the VIX paper this week. Not a banger day, a decent day, almost 400,000 contracts on the tape. The ADV, 689,000. So coming back down below 700K, down about 22,000 this week. So again, that's still respectable given where we are in the end of the year. Again, kind of reflecting what we've been saying throughout the show here, that we're not seeing the usual capitulation on the vol front that we normally see this time of year. So intriguing stuff. If you're wondering, is it still 10-0 calls over puts in the top 10 out there? Yes, it is. For pretty much it's been a couple months straight now out here. We've been naught but calls, no puts to be found in the top 10. Cost you 195,000 contracts to break into the top 10 as we round out the year. That gets you to the Feb 30s. If you're wondering what the smallest top 10 position in VIX is right now. Most of the days this week have been kind of what you expect. Today, like I said, almost 400K. Yesterday, decent paper, 623. And we had Tuesday, 574. Monday, 384. So kind of light, which, again, you expect this time of year. The one exception coming on Wednesday. Wednesday, obviously, the banger day out there. 1.66 million contracts on the tape on Wednesday. The lion's share of that coming in two size trades. 213,000 of the Jan 18s going up, followed by 182,000 of the Feb 20s on Wednesday. Worth noting, both of those trades appeared to be closing. So interesting stuff. Then we have 74,000 of the Jan 15s. Those were opening. 70,000 of the Feb 16s also opening, and about 70K as well of the Feb 15 puts. So, excuse me, the Jan 15 puts. So the 15 strike in January, a popular one on Wednesday. But so we can have some banger days even towards the tail end of the year out here this week. But other than that, nothing really standing out here this week in the final trading week, at least for us here on the network. Obviously, we know we have a few more sessions next week before the final bell, but intriguing stuff nonetheless. As we look back on the year really quickly, Mr. Rock Lobster, anything stand out for you on the VIX options front? Any interesting trends or trades? Does it make you think, that was a weird one?
Oh, wow. Well, we did talk a lot about, I thought we had a lot of sort of 1x2s this year, where they were looking for that that sort of big upside, like a vol pump play, like buying two, selling one type of trade. It seemed that trade stuck out to me a lot. Also, another thing is VIX puts became popular again because we got the 12 handle back. So we, even though the last month vol's been kind of stuck or whatever on the low end, can't really break through 12. We did get to a low end of the year, and there was a lot more play in VIX puts. So I mean, those, sometimes VIX can be really fun when it gets a little lower, and trading 14 and the 12 puts are 10 cents, and then you get that little breakdown to 12, and they double in value. So there was a little bit more downside VIX put lotto this year than there has been in the past couple of years, just because, the upper end of zone one, the lower quartile of VIX is open, and it makes a lot more of those junk puts more fun to trade because, vol can get down into the 12 handle again. So I would say that is for me, those two things are, I don't know if the big long Vega plays worked very well. Maybe small this year because we didn't get a lot of vol pops. So, I mean, you have to say, if anything, 20. I wonder what Russell has to say, but I think 2023 would be the year that VIX calls really went to die. There wasn't a lot of vol pops relative to the quality of the market noise around on those.
No, we've said it many times, and you're right. This year was certainly a year where it came to pass, where if you had the upside, you had to be quick on the trigger finger. I had that strangle I mentioned coming out of the Fed last week, and I had to dump those calls fairly quickly, and that turned out that to be the best part of the trade. But intriguing stuff nonetheless. Speaking of intriguing, it is our year-end spectacular year in review episode. So I thought it'd be fun to look back on a little bit of what you folks thought in our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. We've done a lot of great questions and polled you folks on a lot of great topics throughout the year. In fact, I think even though we're going to be off next year on the live front, maybe we'll see if I have some time here in the Southern studio. We will collate a year in review type episode looking back at all of the different topics we polled you guys about and some of your surprising results we had throughout the year. But we did manage to collate some of those as they pertain to the world of volatility. First, really quickly, let's pay off some of the questions we've asked you recently out here. We asked you just on the show, I think it was last week, maybe 2 weeks ago. I forgot which one. It was last week, I think. We had a quick flash poll. We saw 100,000 of the Jan 17s going up in VIX for 77 cents. We asked you, very simply, you want to buy those, or are those sold to you? And it was back and forth. It ended up being 52%, so almost exactly split. You folks chose to buy them, 48% saying sold to you. So that's what makes a market. You guys are evenly split on the Jan 17s and VIX for 77 cents, which is kind of interesting in and of itself as we're coming into what is the usually seasonally quiet period of the VIX curve out here. Same deal with SVIX. You folks like the fact that it is adding VIX options into it. Exactly half of you, 50%, saying you are now more likely to trade it as a result because you think it's safer. 30% saying you're less likely due to the tracking, and 20% saying you're still gun shy after XIV. No right answer to that one. More kind of just an interesting sentiment type question. Let's get out some of the other questions we asked you this year that kind of dovetail on the vol front, and some of you are surprising results all the way back to the beginning of the year. We said, let's kick off the new year with our annual January sentiment poll. You had to buy a 10% out of the money call expiring end of the year. So next week on one of the following product categories, which one would you choose? We gave you the S&P 500. So that's kind of your general equity choice, or Bitcoin, your crypto surrogate there, or WTI or VIX. And 43.3% of you chose the S&P 500. Not a bad choice by any means, but not probably what is the overall winner. That would probably go to Bitcoin on this list. Clearly, it's not WTI. Clearly, it is not VIX. So in order of returns, it probably would be Bitcoin and then the S&P and then everything else. But our audience kind of went the other way. You went S&P first, then a tie, 24.4% each, which is interesting, for between WTI, I should say, and VIX. Both of those not looking bueno at the end of the year. And Bitcoin bringing up the rear. No love for Bitcoin, only 7.8%. Turns out that was the banger trade of the year if you had done that one. Or even, dare I say it, Solana. But that's a conversation for our Crypto Rundown show. Another question. Matt was just talking about this, and we asked you this back in February. We said, a very simple question this week. Is the zero DTE explosion in SPX increasing intraday volatility? And nearly 61% of you said yes, 39% of you coming in on no. I wonder if we re-racked that now. It might actually be higher, just given the fact of what we saw this past week with that end-of-day sell-off. I know that spooked a lot of you, so if I had to wager, this would be the same, if not higher, for these results right now. But maybe we'll revisit that one again early in the new year. Mr. Matt, I'm curious. You were just talking about this. Do these results from our poll earlier this year, do they surprise you, sir, or is that kind of what you expected from our audience?
Well, I think the effect has gotten much greater, and it's hard for some people to see it. And so I actually think if you were to redo this poll, it would be more towards the no. So, I think it's a good question for January, Mark.
I guess, yeah. I think the only way to decide this, Mr. Matt, is to put it out to the ultimate arbiter, which is the audience. So look for this question again maybe early in January, listeners, and we'll have some hard data in our hot little hands. Speaking of hard data, it's hard to believe this was this year. In some ways, it seems like it was a lifetime ago. But they launched one-day VIX this year. Remember that? Seems like 100 years ago now. And so we asked you back when that came out earlier this year, is this a meaningless number to clutter up your trading screen, or is this going to be useful for your trading? And you folks weren't in on it. 74.4% saying no, this is a meaningless number. 25.6% saying yes. I don't know, Mr. Rock Lobster, in some ways, doesn't it seem like it was a lifetime ago that they launched single-day VIX?
Yeah, and I have not been able to figure out how to use it in any way, shape, or form. I just think it's too funky of a calculation to really be useful. I was noticing on LiveVol, though, to Matt's point about like the one day options and the gammas in LiveVol for today's at the money option is 0.03 gammas. And gamma for the January 19, basically, the next ordinary cycle out is like 0.0001 or something like that. So it's factors of magnitude greater, the amount of gamma being pumped into the market with the zero DTE. So if the public is selling a lot of those options, the dealers are buying, back spreading a lot. It's a ton of gamma, and that is going to create some kind of hedging factor to some degree. So I just thought that was an interesting little Greek data point for people if that's the way the flow is going. But I kind of it'll be. I don't think we have seen. Like I said, the Dark Lord of the zero DTE has not quite stuck his head out yet. And maybe it never will. But it's usually with all new products, there's usually going to have a come to Jesus meeting at some point with it.
If only some deeply insightful person hadn't been calling these things gamma bombs from day one. I don't know who that person could have been, but that person was right on the money. What an insightful person that must have been. Maybe we'll discuss that on that panel we're doing next month coming up in STA. Should be a fun one. Let's keep rolling here, listeners. Let's go out to that question we asked you at the beginning of the year. We revisited it again in August. That sentiment poll. See if your sentiment had changed. And the answer was yes, slightly. You kind of went in the wrong direction. Fewer of you now, 37% in mid-August wanted to buy the S&P. That was still the highest percentage, but down about 6% or so from where it was in January. WTI ticked up. Nearly 30% of you wanted WTI. That was the wrong trade. And VIX also ticked up about 2 points to nearly 26%. That was also the wrong trade. And Bitcoin ticked down to only 7.4%. So still bringing up the rear. That was also the wrong trade, because if you had bought Bitcoin around August, you're a happy camper right now. So intriguing stuff out there. We also asked you on the 0-day front, listeners, again, a popular theme. Obviously, everyone's obsessed with 0-day SPX, but that's a hit. That's a home run. No one's disputing that. But everyone wants the next thing, the next 0-day product. So what should that be? Gave you 4 choices: single name stocks, so your Apples and your Teslas, or going out to the commodity space. So it could be, take your pick, ags, energies, whatever you want to fit in that bucket, or crypto, even though there is some 0-day liquidity out there now, but people obviously want more, or in the vol space. And I remember Sebastian took deep umbrage at that. He was saying there never will be a 0-day VIX and yada, yada, yada. Turns out 43.2% of you saying you want a 0-day Apple and Tesla. I kind of figured that would be the case. Right behind it, though, you folks want some 0-day vol. You want 0-day VXX and 0-day VIX and everything else. So that should be interesting because, SIBO, they're not dummies, and all the folks issuing these ETPs. Can you imagine a 0-day VXX and all the things, 0-day UVIX? All the fun that would be involved in that. It's a gamma bomb of a gamma bomb. That's a conversation for another day. Commodities bringing up the third place spot, 18.9%, and 8.1% of you choosing crypto. Getting back to, we also, actually, Matt, we have some more recent data on the 0 DTE front. We did revisit this question again in August, we said, hey, once again, do 0 DTE options increase intraday volatility? And it was slightly higher, Matt. 63% saying heck yes this time. 29.6% saying heck no. We gave him an out this time. We gave him a third option, and then 7.4% of you choosing I still need more data, which quite frankly is the logical answer. But Mr. Matt, so we ran it again in August, and it was slightly higher. What do you think?
There goes my theory. I think it's pretty obvious looking at the data that it's dampening. So, I think maybe what you're seeing is just people talking that, they love to talk up the 0 DTE boogeyman, but it's really not. So, I think that might be the mainstream media, Mark.
Yes, the mainstream media seeping in to my network as much as we try to keep them out. See a lot of people in the chat saying that we're wrong on all these polls. Hey, it happens to the best of us out here, listeners. There's no wrong answer at the end of the day. We're just trying to gauge your sentiment. Speaking of which, we asked you folks recently a flash poll during the show. I think it was when Mr. VIXologist was on the show. He's the captain of the UVXY Defense Force. And we said on the show, do you still trade UVXY with UVIX in the market? Almost 60% of you, 59.4% of you said yes. Only almost 41% said no. This one was kind of mystifying to myself, and I believe the meatballs on the show with me, because I've always been a fan of you're going to trade the product that does the thing better, and UVIX does it better demonstrably. On the flip side, though, I do see the argument for UVXY liquidity. So you're trading a neutered product, but it's more liquid. I don't know if that's a winner at the end of the day, but hey, that's a subjective argument, and clearly 60% of you almost like UVXY still. And the numbers bear it out. Obviously, more ADV and UVXY right now. And also, we gave you a final month of the year crystal ball prediction recently. I gave you 4 ranges north of 15, 13.5 to about 15, 12 to 13.5, or south of 12. And about 43% of you chose the 12 to 13.5 range. 22.4% choosing north of 15. So looking for a little bit of a vol pop, which recently didn't look too bad. And then 18.4% saying 13.5 to about 15. And 16.3% going for the anemic route below 12. Speaking of crystal ball and all that fun, let's get to some of that right now.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, it is our final show of the year. We have a lot to pack in here. Probably going to run a little long, but hey, you don't mind, right? Looking at the crystal ball, maybe our co-host will be happy. Let's see. Let's run through really quickly here, listeners. I came out of the gate hot this year in the crystal ball. Got a bullseye on the first episode of the year, January 6th. So that pointed to an auspicious start to the year for me. And I have to admit, I think I did pretty well this year. On the 3rd, coming out on February 3rd, about a month later, the producers tried to credit me with a half bullseye. I think I was 0.11 away. But charitable man that I was, I did not take it, even though I could have been. So I'm keeping within our 0.1. So I won't take that one, even though it was a close fought issue. The 10th of February, Sebastian got his first bullseye for the year. On March 24th, I came back with my second bullseye. On May 19th, Russell got one of our few guests to score a bullseye this year. July 14th, back in my column again. August 11th, Steve Sosnick from IB got a bullseye here. So our second guest to get a bullseye, followed by September. September was a good month for me. I got bullseyes on September 15th and September 29th. I followed it up with another bullseye on October 27th. The Rock Lobster came in with one on November 10th. And then both he and I split bullseyes. We each got a bullseye on December 8th. So that brings our grand total for the year to Russell with one, Steve Sosnick with one, the Meatball only with one. So a very anemic year for him. His palindromic nonsense not coming in to play this year. Andrew looking a little bit better with 2, and me taking the winner chicken dinner with 7 bullseyes this year. So I got to admit, Mr. Rock Lobster, not a bad year. 7 bullseyes, I'll take it. I have to admit, I expected a few more from you, sir.
You know what? I didn't have many appearances on the show.
Yeah, Sebastian out-appeared you probably 2-1, and you doubled his bullseyes.
I easily doubled my, that's not an excuse, of course. I don't think I did more than 6 shows this year, maybe, but I could be wrong on that. But I have to give you credit. 7 bullseyes is substantial, man.
It's not enough. I should be managing the vol book, and I'm not talking to you, scrubs.
Yeah, I know. And you close a couple of those short puts in UVIX, and you'd be buying me dinner again at Gibson's this year.
Yes, let's all talk about the fun out there. And that was UVIX. That could be part of our year in review as well. In terms of looking back at the year, we also asked you folks at the end of last year, a lot of you chiming in with your thoughts for where VIX will be at the end of the year. Obviously, we don't have the final trading day in our hot little hands yet, but we have a sense for where we're heading. We asked you this time last year, where's VIX going to close the year? This year, explosive, so north of 26. Probably not going to hit that. Juicy, 21 to about 26. Again, that also shows you where we were a year ago in VIX. Mildly frothy, 16 to about a 21. Or, as we put it then, snooze fest, south of 16. That does appear to probably be the winner chicken dinner. But you did not vote for that. You folks chose the mildly frothy 16 to 21 range, nearly 34%, taking the top spot, followed by the juicy range of 21 to 26, 25% there. Explosive, so north of 26, 24.2%. And then where we are right now, snooze fest, bringing up the rear, only 16.9% for below 16. Let's run through some predictions here really quickly. A lot of people were chiming in on our end of the year. Jim Carroll also said we should have a bonus question. What will be the highest close? We had some of those out there as well. A lot of predictions here really quickly. Let's see, run through a few. We had Matt. Matt chimed in last year. You thought an 18.5 for where VIX is going to be. We still have a few sessions left. We could get there. Probably not. Andrew, you were a little closer at 16.88, so not bad. We had Dan Passarelli from Boot Camp, 22.49. Not going to get there. Russell was at a 16.97. Probably not going to hit that, but you never know. The Meatball doing his palindromic stuff again, 18.18. Probably not. I was even higher. I was 21.35, so no joy for me. Other network people, Jim Carroll, he was at almost a 30, 27.82. My goodness, no joy for him. Carly Garner from our Twifo show, she was at a 13. So she's only about a quarter of a point away right now, so that's not looking bad. A lot of you chimed in as well, a whole bunch of you, a lot of 20 handles, a lot of 18 handles. Queen, 1880, so you were looking much higher than normal. Frank, right behind it, 1870, 22 handles. So our producers will go through all of those as well. We also had a request to guess the VIX average for the year. I'll have to calculate that and see what that turns out to be. I don't have a number for that off the top of my head, but a lot of you were guessing that. We've got 18 handles here again, 20 halves, all over the place. So it looks like on the network side, network hosts, it might have been Carly Garner who's coming in the closest right now. But we shall see. We have a few sessions left. We all know anything can happen. So, Mr. Matt A., are you surprised by your prognostication from last year? And then B., as we're winding down the show here, what are you feeling for this time? We're not going to have a show next week, so let's try 2 weeks for VIX, as well as the big one, sir. Oh, by the way, today's guesses, I was at 12 double, not looking good. We're at 13.25. The Meatball is at 12.21, no joy there. Russell last week was at 11.80, so all of us were lower. Surprise, surprise. And no joy for us this week on the show. So, Mr. Matt, you get to go first. What are you feeling for not this time next week, but 2 weeks for VIX? And then also, more importantly, the big one, where will you be for the end of the year next year, sir?
I am 13.8 for 2 weeks from now. And I am 14.95 for this time next year.
You had those ready to go. It's like you've been crunching those all episode long. All right, 14.95 for the end of the year. Mr. Rocklop's, the same question for you. Are you surprised by your prediction from last year? Any umbrage or comeuppance there? You're closer than me, so you get a bonus point for that. And then B, what are you feeling for this time 2 weeks from now? And C, what is your end of the year vol prediction?
Okay, so yeah, I don't think my end of the year was that bad considering. I mean, remember where we sat in December of 2022, right? everybody's like, oh, this is going to be a rough year. Rates are going to go up. It's all going to be hell. So we mostly faded that, I think, to some degree. At least where we were, I felt like. So what I would say is, in 2 weeks from now, I'm going to say we'll be back in the 12 handle, and because I think we'll be above 4,800 SPX. So it's going to kind of meander a little bit. So I'm going to say 1265 for 2 weeks from now, VIX. And next year, I'll say 1425 going into the end of the year.
Interesting. 1425 for the Rock Lobster. I was just about, as you were saying that, I was about to type 1255 for myself for 2 weeks. So I'm gonna adjust that down now to give you some room, and I'm gonna say 1225 for me. I don't want to be just a tenth of a point away from you. That would not be nice. See, nice host that I am. I give you breathing room, Mr. Rock Lobster. So 1225 for me, and then end of the year. It's not like I didn't know this question was coming, but I need to mull this one a little bit. All right, let's go next year, end of the year. I'm going to say it. I'm going to say this number has been kind of popping in my head for a bit. I'm going to say 1697 for this time next year. If you're listening live, get your vol for 2 weeks, but more importantly, get your vol for end of the year. Well, they're going to go through. We had a lot of submissions for last year. We're going to go through all of them. Producers go through all of them. If you're within our margin of victory, listeners, you're going to get extra super fabulous prizes. Because guessing the vol at the end of the year, I think we had, our buddy Neil Wales did it, I think, a couple of years in a row. He was a bullseye master. So I'm not sure. He was in there. I'll have to see where he was for this year. But you, too, can win fabulous prizes. Get them in, listeners. We want to see what you folks think. For end of vol, we'll make our official Twitter poll coming up next year. Unfortunately, that's going to do it for our vol in review episode. Also going to do it for this year. Crazy, this year. And Volatility Views. Before we go, Mr. Rock Lobster, if folks want more Rock Lobster goodness in their lives, they want to hear you spout on about VIX and S&P moving in the same direction, where should they go? What should they do?
Yeah, go to optionpit.com. All our products. Great year for Option Pit and all their products, and especially mine. Pretty fantastic. So if you want to learn how to trade in a scalable way, instead of just flinging stuff against the wall, go to optionpit.com, and if you heard this show, you get 10% off. And I wish you all a Merry Christmas.
But my wall here is nice and textured, so if I throw stuff against it, a lot of stuff sticks. So it's a good wall to throw stuff against. Why can't I do that? I don't understand. I guess I should go to Option Pit. Optionpit.com, listeners, the place to go. If you need more Rock Lobster in your lives, don't worry. If you're on the pro side, he'll be back in a little bit with me to break down the entire mad year. That was 2023 from an unusual activity perspective, and yeah, there was a lot to talk about, so we'll get to that in a little bit. And before we go, Mr. Matt, if folks want to play around with Otto and invite a rogue AI into their lives, where should they go? What should they do?
Yeah, come on over to ORATS. We have just a ton of stuff coming out. We just released a custom scanner, so I have my caller that I used to have to use two separate scans, and I could get it in one, so you could make your own scans and set delta ranges and stuff, so it's pretty cool. Matt at ORATS is my email. Email me if you need anything, and yeah, Happy New Year to everybody, and Merry Christmas.
Looking here in our live chat to see where the Queen, well, she went 15:30 for the end of the year. She's usually pretty prescient, listeners, so I try to avoid the chat until after I make my prediction. I don't want any accusations of skullduggery. Speaking of the chat, hang out there if you're listening live. If you're on the podcast feed, of course, this will be coming up a little bit later for you on the pro podcast side. If you're on the on-demand side, that will conclude your broadcast year with us, unless we put out a little fun, shall we say, a year in review spectacular on the on-demand side next week. So look forward to that, maybe looking back at some of our questions of the week in a lot more detail. That's going to do it for Volatility Views. Have a great weekend. Have a great holiday. We'll see you back here in the new year. Another episode of Volatility Views.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.